Hello, I'm Jeremy Allaire, and this is The Money Movement, a show where we explore the issues and ideas driving this brave new world of digital currency and blockchains. Since our last episode in mid-December, there's just been a breathtaking amount of activity in the crypto space. There's been, obviously just this incredible growth in what's happening with digital currency. And it's been obviously really inspiring. And I think just on the whole, all of us can see increasingly that, crypto is just lurching, further and further into the mainstream. And I think this is obviously on a broader basis, driving more interest. That interest is surging. It's not just on the investing side. It's really people trying to understand, what this change really represents. We have obviously these stored value assets, and we have an incredible amount of interest around that. But there's more fundamental things that are happening, and I think it's really easy to get focused on things like the price or the investment thesis in these underlying assets. And while I think that's really important, I think the much more interesting thing to focus on, and I think a lot of why so many of us got involved in crypto over the past decade, is the real transformation that this can bring to the world. And I think kicking off 2021, I wanted to kind of widen out the lens a bit and explore more of the big picture social, political, kind of economic impacts of crypto. I know for me, when I got involved in this, back in 2012 and early 2013, there were a lot of light bulbs that went off about what this infrastructure represented and what it could represent in terms of changing the way economic activity and human organization happened. And so I think, when I kind of zoom out like that, the sort of this rapidly accelerating adoption of blockchains and cryptocurrencies are really just like early indicators for, and obviously enablers for, what I think is ultimately a much, much larger global social and economic transformation. And crypto infrastructure itself offers a radically new infrastructure on which to construct social and economic institutions. In many ways, it creates a new kind of fabric for how individuals collectively work, how they work to create things, how they work to share value, and ultimately is giving birth to, we're already seeing it giving birth to new kinds of corporate forms that are only really made possible by crypto, and that offer the potential for human economic freedom that even conceptually and literally transcends the legacy nation state system and forges this new path for how people and society can organize themselves. So this week, I'm really excited to explore all of this and really excited to be joined by two innovative leaders and thinkers from the crypto world who are envisioning what this world could become as we keep building. Balaji Srinivasan, the storied tech entrepreneur, innovator, disruptor, futurist, and Ian Lee, who will be joining us in a little bit, who's I think a fantastic thinker, builder, investor, is going to be joining in a bit for this conversation. But I just first want to kick things off with you, Balaji. Welcome.
Hey, great to be here.
Yeah, it's awesome to have you on. I know just before the show we were talking about last time we chatted and stuff, but I wanted to actually just start and thank you actually, and just offer my gratitude, because I don't know how many people are aware, but you obviously played a really, really pivotal role in what became USDC. And for folks that don't know the history, Coinbase and Circle obviously collaborated together to launch USDC over 2 years ago. Almost really started like 2.5 years ago, and Balaji was really, I think, just an incredible person to collaborate with in making that happen. And I think, it wouldn't have happened without you. and I think we're all really proud of that. And I just want to first just offer my gratitude and thanks because you've been a really big part of that.
Well, I appreciate that, and you guys, yeah, that was absolutely a team effort. And I was really proud to work with you folks. You built a great, initial smart contract, and I think, that was quite a sprint. We did that in about 30 days, as I recall, and not much sleep on my side, and probably not much yours on yours. But that was a great launch, and I really think that we built probably the best stablecoin out there, I think, in the fullness of time. I also respect what the DAI people have done. That's a different approach.
Totally.
But I think that we put a dent in the world, and I was really proud to work with you on that.
Yeah, very cool. Well, thank you again. And I think it ties into some of these other themes, which is like, there's these building blocks, and what are these building blocks? And obviously, like, representations of fiat money is like a building block. It's interesting and useful in a lot of different ways. But like I said in the intro, like I want to zoom out a bit, and I think, like, maybe just to start, I'd love to have you chat a little bit about when you think about public chains, whether second generation, third generation, kind of where we are, what do you think? Very big picture. What do you think that this technology represents? What do you think this technology enables on a very large kind of global, social, economic, macro kind of level?
I mean, it's a new system of property rights that basically, I think everything is becoming digital, that is, say 2020, I mentioned this in a previous talk, but 2020 is the year that things switched over to the internet as being primary. And I think a non-obvious concept is that all wealth becomes digital. And so that's obviously true for a lot of wealth, software is eating the world, but it's not obvious that it's all wealth until you start thinking, okay, it's not just, PDFs, but the instructions to go and print out a machine part, or to deliver something, or for a robot to manufacture something, or for a drone to deliver something. More and more of the world will be automated. And as that happens, asymptotically, all wealth is digital because the instructions to instruct those robots are digital. And then how do you protect that kind of digital property? Well, it's all crypto. And so essentially, crypto is the basis for the next system of property rights. That goes extremely deep. Go to Locke and his theory of government. And government's legitimacy comes as a guarantor of property rights, but that it's a different guarantor online. It's cryptography and it's cryptocurrencies, and so this is like a really foundational philosophical thing that has deep implications for many disciplines beyond just computer science or economics.
Yeah, absolutely. I mean, I think, like, this bigger theme of when we think about what units of organization even are. And how individuals kind of collectively interact in those, and what the mediation of that is, and how people can form those, and so on. We're going to talk a lot more about that, but just at a very high level, when you look at kind of where things are today, and sort of as I sort of like to say, like we're sort of entering the third generation of blockchain tech right now. Yep. And I think, like, whatever kind of Moore's law equivalent you want to apply to, like, the evolution of blockchain tech over the next 10 years, what do you think, taking your concept of basically all property, becomes digital, and a little bit of what you've elaborated, like, where do you think that takes us in 10 years? And obviously I like to remind people, like, 10 years is very fast. Actually, it's a really fast period of time. Like, and even, these big arcs of change that happen with the internet, like, they happen a lot of times over like these 10-year periods. And
Yep.
So it happens pretty fast, but obviously, like, Bitcoin's over 10 years old now, but where do you see this kind of leading us, and what impact do you see that having in terms of the kind of social and political institutions that we know of today?
Well, so one thing I think is that Bitcoin, and more generally crypto, becomes the option for lots of countries that don't want to be caught in the US versus China Cold War. So it becomes like the option of the rest of the world. because they don't, the dollar is increasingly being weaponized and used to impose sanctions and deplatform people, and not just quote unquote terrorists, but it's just a much it's a constantly expanding set of people. It's just mission creep, And then conversely, China's digital yuan, well, I mean, it's probably going to be quite functional. I mean, they're smart and they execute and they are really serious. But you may not want to have your entire economy based on digital yuan also, right? That's got its own risks. And so a demilitarized zone is attractive to everybody who can't be number one.
Yeah.
And so that's a very powerful thing, like, kind of the human psychology. If I can't be number one, then no one should be. Well, crypto is for you.
Yeah.
And that's very interesting. I was just joking to a friend of mine the other day that we're going to be giving a new term or new definition to a rootless cosmopolitan. If you know, that old term is kind of an epithet against what we'd call the digital nomad today, right? Somebody who didn't have roots and would move from place to place and so on. But rootless means something different in the context of a blockchain, because a blockchain is a database that doesn't have a root user.
Right. I was listening to some of your comments on this on another talk. Yeah.
Yeah. So, the reason I came in from this angle is, there's different ways of cutting the space, obviously. But let's say, your audience, you're talking to somebody who's a AWS or, Azure person who understands databases, understands Postgres, a backend engineer, and right. And their common kind of opening gambit is, oh, blockchain is just a slow database. And say, well, okay, let's make a table of features. Yes. Right. Performance is less, but guess what number we've massively increased? We have made it massively multi-client. We've massively increased the number of simultaneous root users. And I can prove that because what is your Postgres password? Did you post that on the internet? Port 5432, and so on. Most people don't, right? You cannot read every table and row in the main Twitter database, let alone all their data warehouses and so on. Those are not public data sets. And then immediately the response is, well, we don't just trust anybody on the internet to read our data. I'm like, so you don't trust everybody. And so therefore, trust is actually an implicit design consideration, right? And so then you start to get to the idea of, okay, wow, they solved this problem of having essentially a database that anybody can read every single byte.
Yeah.
Anybody with the digital asset can write to, and anybody with enough compute can write blocks to, if you're mining, if it's a proof of work chain. Of course, there's variations, and that's just this completely different world. And one thing that's kind of obvious to me is crypto is not just open source, it's open state and open execution. But what that means is you don't just have the source code visible, you have the backend, the database visible, and you can also replay the entire history of the blockchain, including every opcode. This addresses obviously many of the problems with social media, because the market power that Twitter or Facebook uses to deplatform competitors, which they did to Meerkat and to countless companies, have been hit by basically being deprioritized out of the Facebook feed or the Twitter feed, or just individuals who've built up followers or what have you and just can't reach all of them, on Facebook without paying ads. All of those kinds of things go away if that backend was actually open. And the fundamental thing about an open state backend is that anybody can write different clients to it. This is what Twitter used to be. Remember, it used to be an API and a backend. The issue was that folks started implementing new front ends that replicated all of the features of Twitter. And so then what happened was they were no longer the monopoly provider of advertising, and they couldn't figure out how to monetize the API sufficiently. And so they throttled access and they nerfed it until it was just something that came through the main client. Today, though, the next Twitter would basically tokenize it. And so, you might there's different ways of doing it. It could be the internal currency of it. You could tokenize messaging. There's many different ways to do it. But it's obvious that there will be a tokenized version or versions. Yeah. And when that happens, it's going to happen as blockchain scale. I think ETH2 is promising. Some of the new L1 chains may be promising. I think actually those chains, rather than chasing digital gold or DeFi, they'd be well suited to chasing these kinds of application areas and just specializing. Go ahead.
Content. Yeah, totally. I wanted to come back to something you said earlier, and it sort of is on that kind of currency, kind of store of value, kind of piece. I think, obviously people who've kind of looked at the history of money realize like fiat is sort of the exception, not the rule. It's a really very relatively recent phenomenon, and for the most part, the world wanted to operate on non-sovereign forms of money for almost ever. And so the idea that the much of the world would want to be able to transact, store value over the internet in a non-sovereign store of value is quite, in some ways it's obvious that that's sort of what people will increasingly want to do. Not just to sort of get outside of the US and China kind of implicit kind of economic warfare, but just as a general matter.
Yeah, as a peer-to-peer thing. Yeah, absolutely. Yep. And I think, by the way, that's the other thing that's interesting about crypto. It's the second choice for many Americans and many Chinese. Millions of millions, tens of millions of people in both countries like crypto. Yeah. And so that's a good backup plan where, Americans using crypto, well, at least it's not China. Chinese using crypto, well, at least it's not America,
right.
So I always look for something like that. It's like ranked choice voting or what have you, it's like everybody's, it's a lot of people's first choice and a lot of people's second choice. That means it's kind of a global first choice. It's a very important thing to look for.
Yeah, and obviously we're going to see a lot of experimentation in synthetic algorithmic types of stablecoins. We're going to see, I think, synthetic fiat digital currencies, all kinds of fun stuff. So that'll be interesting to watch. I guess, one of the things that I'm interested in exploring as well is, the ultimately like the broader, social and economic and political implications of this technology. We have an infrastructure which by design doesn't have a concept of a border. I mean, the internet itself is right. like routing tables and IP, like that doesn't care what a country is. But fundamentally, when we're dealing with this fundamental forms of record keeping, fundamental forms of kind of trustworthy compute, the sort of layer there. Again, it doesn't care what a border is, but it has these like underlying materials that you can work with. And the thing that I've really been drawn to is this idea that we're going to see new microeconomic units of organization that are created that exist entirely as sort of transnational corporate forms that are effectively, they entirely exist in a tokenized form, and they entirely exist on chain, and individuals can kind of connect into those, participate in those. I'm interested in your thoughts just at a very high level about, where you see that, where you see these new corporate forms kind of birthing out of public chains as well.
It's a great question. So I think we're going to see, on-chain incorporation is going to be very important. Aragon project is like a V1 of this, and
sure.
Their CEO is a smart guy.
Yeah.
I think we're going to see more, and so I'll give a few concepts on that. Last year I wrote that. This is before the pandemic, actually not last year, I should say 2019 now. 2019, I wrote that San Francisco and, setting up in San Francisco and incorporating Delaware is now starting to be clearly wrong, but we haven't yet gotten to remote first, and on-chain incorporation is clearly right. But that's obviously the future. Now, 12 months, not even 12 months later, remote first happened, right?
Yeah, absolutely.
And I think the next step for a truly global business is on-chain incorporation, right? And, so we're already part of the way there in terms of a lot of these DeFi things are there, they're basically doing on-chain incorporation. The wallet is on-chain. They have, Uniswap or something is receiving fees on-chain. This model I've talked about, go ahead, sorry.
Yeah, I was just saying governance voting, et cetera. Like
governance voting, that's right. And, this model I've talked about called SaaS for gas, which is what it sounds like. It is a new SaaS model where you have an on-chain address and you receive fees as somebody uses your smart contract, right? And why do they use your smart contract rather than fork it? Well, it may be linked to some offline code. It may simply be that they trust that that's the main one and it's not going to have some weird security bug and so on and so forth.
It might be composed into a bunch of other things that are valuable for you too.
That's right. That's right. So SaaS for gas is cool because it's very self-explanatory and it's a new business model, right? Where it is, it's open source and open state, but still monetizable. Every invocation, you pay the invoker, right? Okay. And so I think that on-chain incorporation, the way to make it happen is there's 100+ countries in the United Nations, and what we want to do is first write a series of blog posts that show every step in setting up a company. So, like for example, V1 is you set up a company, and then it's acquired for $1 million, and you show the liquidation waterfall, right? And then V2 is you set up a company on chain, and you have a Series A investment, and you show what that looks like, and then it's acquired, and you do a liquidation waterfall. And then you start getting more and more complicated. You have pari passu, and you have all the crazy kinds of
structures.
Exactly. And the thing is, every single venture capital term arose because of some historical train crash, and then people got together and they said, actually, let's avoid that by actually spelling out drag along, right?
Yes. Right.
Then we can figure out what happens in that situation. And the entire cap table is basically an equation for who gets what money when.
Absolutely. Yeah.
Right. And then of course you've got the debt stack and so on and so forth. That's basically just a set of equations. And another way of thinking about it is the corporate charter has like almost an ACL table. Mm-hmm. Right? Which is, for example, you've got, you need a Series A, a B, and a C majority in order to issue Series D shares, right? That kind of stuff, right? And so you can actually, and I have at times gone and taken corporate charters, and just as a VC, you go through a lot of this stuff. And just for me to understand it, I would enumerate it like this, and I'd just get a lawyer to be like, did I read the legalese correctly? Yeah. And so I kind of got my PhD in corporatology or whatever doing this, right? So I think that a very useful thing, those terms are actually very useful terms. And one of the problems with the ICO boom of 2017 is it was just raise money online without vesting schedules or all the mechanics that we figured out.
The substance of why you have corporate forms, right? It's not just like we can do whatever the fuck we want and, yeah.
That's exactly right. So especially when it's online and you have a lower trust environment than you do with VC, right. It's actually quite important to take some of those VC concepts and put them online. Yeah. So I think a series of, maybe 100 exercises, and then you build up to something like, the Facebook IPO or something very complicated like that, right? Which has debt and it has proxies and it has the whole shebang, right? And you show all of that happening on chain. And now you've got like basically exercises that show like the whole life cycle of a company, right?
And then you merge the treasury is, digital currencies, right? The treasury it can be stablecoins, it can be, and, essentially like a corporate form is essentially, a treasury and a governance around the treasury, and the treasury can have its own native token, which is, call that equity. And the treasury can have, obviously like obligations, and it can, spend and receive and so on. So you kind of,
that's right. And so by doing this, what you do is you sort of build the on-chain analogs of everything.
Yep.
And then what you do is you start taking that to law reviews, right? You take that to, folks at Yale Law, you take that to lawyers in different countries, and you say, look, here's what I did. I showed a bunch of scripts that essentially replicate Delaware stuff, but put it on chain. And how can we write some law review articles on this, proposing that this be accepted as, you
need supports to say, yeah, this is valid, and this is a form of, a form that has substance. You've seen that in some places, like even Delaware started to do some of that as well. But
that's right. And Delaware and Wyoming are fairly, far-sighted on this. Okay. But in this fashion, you would then, so you get the code. That case you can do pretty relatively quickly. I might put up like a bounty or something, Bitcoin prize to do this, right? Do that relatively quickly. And then you send it to far-sighted people who have been writing blockchain regulations, say, take a look at this. This is a translation map. It's basically like, it's like a scanner, right?
Yep.
Scanner will take something from paper form and put it digitally. This is like a set of instructions.
It's the next leap. Yeah.
So
I want to get Ian in here because I know he's got a lot to say that around this topic as well. So excited to invite Ian to join us as well in the conversation. Ian Lee, who's with IDEO VC and working in the crypto space and building in this space as well. Welcome, Ian.
Yeah, thanks for having me. And also, I just want to point out that when you get Jeremy and Balaji on the same line, Bitcoin breaks 40K for the first time.
Oh, really? Oh, wow.
That actually happened.
We should do this more often.
Awesome.
At least once every 4 years.
All right. That's a good idea. All right. We'll make sure we come back around at 160. How's that?
Cool.
That's awesome. Very cool. Ian, maybe just for everyone's benefit, just take a moment, share a little bit about yourself, and then I want to pick up on this idea of these sort of new corporate forms.
Yeah, sure. So quick background is got into crypto in 2014. I headed Bitcoin and crypto at Citigroup for 3 years, which was the fastest way to get fired at a bank during that time. But I'd been studying open software for quite some time. And after reading Satoshi's white paper in 2014, I immediately realized that what it was not a digital coin. It was actually an open fintech stack. And when you have an open fintech stack, what that could do to the financial system is profound. So, I got kicked out of boardrooms for several months, got reinvited actually back in when Goldman invested in Circle in early 2015. That obviously created a lot of waves, and effectively ran our strategies across the bank for those period of time. When I was there, I met a team at IDEO, which is a 40-year-old design and innovation company that was setting up a crypto team in 2015. So that was called the IDEO Collab, stands for Collaborative Lab. We've been working with hundreds of crypto startups and enterprises over the last 5 years. And then 2.5 years ago, we spun out a venture capital fund focused on crypto and have been investing in and building crypto companies ever since. So it's been a lot of fun.
Yeah, that's awesome. I know some of the topics that we're talking about are obviously like near and dear for you, and I'm obviously excited to hear at some point about what you're actually working on building. But maybe just to ladder off of what we were just talking about, like you actually had a recent tweet storm, and you're sort of developing this thesis around these kind of internet cooperatives. And I'd love to kind of I think the idea is that we were just talking about, which is sort of taking what we think of as a corporation and how you organize that, bring that on chain. Aragon, obviously, creating this sort of community-based, treasuries and governance and other things. Like, where do you see this now?
Yeah. So, I'd love to get your guys' take on this as well. Almost 2 years ago, I was really fascinated by where was crypto and decentralization going to make a really big impact in people's lives, right? That was kind of where I started 6 years ago. And one of the things that was really interesting to me is IDEO had been studying for actually numerous years the future of work, not even related to crypto, right? And when you look at a couple things, work itself is decentralizing. It has been over decades, right? With the rise of the gig economy and things like that, you have more and more freelancers. Like 35% of the US is freelancers today, like 50% will be that in a few years. Right. You combine that with this other trend, which is that technology is starting to centralize power and centralize wealth among a very few number of people, right? So you've got these interesting platforms that are right in the middle of that, like Uber, right? Where you have some people who have become, in some cases, decabillionaires or, whatnot. And many of these people on these platforms that are contributing resources or services to these platforms are often below the poverty line. We live in Silicon Valley and there's people like sleeping in their cars, driving Ubers, right? And this is not specific to Uber. This is happening everywhere, right? 50% of jobs are expected to be automated in the next decade. So you look at those two kind of seemingly unrelated things, right? Work decentralizing, technology centralizing. Mm-hmm. And you wonder, isn't there a better way? Yeah. And so one of the things that I've been looking at for the last year and a half and researching into is this topic that I call crypto cooperatives, internet-based cooperatives enabled by crypto, which is, can you decentralize organizations and the ownership of these organizations to the people that actually provide value to these platforms? And I think we actually have a lot of precedent for this to actually be very excited about the potential, even though there's a lot of work to be done. So the concept of cooperatives is not a new thing. They were actually invented in 1498, so 500 years ago.
It is a corporate form, right? It's just at the end of the day, it's sort of how do people get together and organize their work and bear the fruit output of their work.
REI, Ace Hardware, Vanguard, AAA Insurance, Visa was once a cooperative. The Green Bay Packers was a cooperative starting in 1923. 15% of the world belong to cooperatives, and cooperatives today, which are mostly in agriculture and retail, employ 10% of the global workforce. Now, here's the question though. Why haven't cooperatives effectively been able to, why hasn't that model shown up in technology? Well, because ownership of technology has not been, very easy. So going back to what Balaji said, you can actually now encode the ownership of a enterprise or organization into these crypto, tokens and distribute that across the workforce. So that's what I think the big opportunity is here.
Right. So it's many things. It's sort of the mechanism that is needed so that you actually have a trustworthy infrastructure to know kind of what ownership is, how people are contractually entitled to different things, to make decisions, but to have the actual participation in that be dramatically more distributed.
Yeah, and here's the the big idea is that could the provocation is, could crypto cooperatives start to solve massive challenges that we have around the world right now and that are creating really big problems, second order problems around wealth inequality, right? 99% of the world now owns the same amount as the top 1%, or maybe I should have said that the opposite way.
Right.
The other thing is that, when you look into the research of cooperatives, cooperative models have shown to be more resilient and actually outperform in some cases traditional corporations.
Mm-hmm.
Like in 2008, when the financial crisis happened, credit unions, for example, had a 5x lower failure rate than corporate banks. Many cooperatives, I think there was a study that the 5-year survival rate of a cooperative is 20 to 30x higher than a traditional business. And so these systems, the combination of the infrastructure like Aragon and things, combined with the design and implementation actually within sort of particular work contexts like freelancers or creators of influencers on like markets, TikTok and stuff like that. Yeah, like Instagram, this is all connected. Like the combination of these things can start to, more equitably distribute sort of wealth and value. And number two, make these systems much more resilient long term.
I'd be interested. That's super helpful. I'd be interested in both of you and your perspective. I mean, I think what we saw with the internet in the past 20 years is things became possible that people didn't know were going to be possible. Like like for example, like fundamental new communications utilities emerged out of just like simple pieces of software, mobile devices, billions of people connect to those. Like just that was unimaginable some period of time ago. Is this a similar thing? Like, are we getting the building blocks in place where, whatever people call it, like the Uber moment, where someone just like synthesized enough interesting features together that were right in front of everyone, like a GPS and 3G and a reasonable UX and like, has such a profound change and people can participate in it. Is it something like that where some group of people are going to envision, maybe Balaji, maybe it's a social media platform that is sort of owned and operated as a platform cooperative that is built on decentralization, or is there something that happened where there's just massive scale and success and it just works and it's independent of nation states, it just is out on chain and you've got mass participation and value creation and so on? Like, how does this kind of burst into being in the same way that certain things like social media or other dimensions of the internet kind of burst into existence?
Well, so I have a lot of thoughts on this. I actually have a book that I've been writing. So if you want to follow me, I'll tweet it out at some point. But so tentative title of the book is called The Network State. And the idea is that, we have mechanisms to start new communities and new companies and now even new currencies, but not yet new cities and new countries. And I think new cities, there's actually already legal processes for doing this, where you can go and take unincorporated land, for example, and incorporate it. And with Starlink and with social networks, you could imagine actually building a community in the cloud that would then crowdfund territory and build a city. You do the whole city in VR before you build a single brick. So you argue over everything in the cloud. You build an actual community before you move there. This is actually similar to the 1800s when people would move out and build communes and so on in the west of the U.S. I think to get to like something like new countries, you're going to need new techniques. Most importantly, you're going to need international recognition. And that might seem crazy, but think about how far Bitcoin has come in the last 10 years. If you have a community of 1 million or 10 million people that considers themselves to be a digital nation, has a footprint worldwide, and is serious enough about it for long enough, and does all the diplomacy necessary, I do think that you will get a new country recognized in the UN, just like you've got new currencies that are being recognized on Bloomberg and so on's exchanges, right? So I think that's a mechanism by how that happens. Ian, to your point earlier, by the way, on influencers, I'm an investor in like tryroll.com, which is doing social money. And I do believe that, that's just one, but I do believe that it is going to be influence. This is maybe obvious, but the next social media platforms will be rating influencers from the existing ones and giving them a better experience. So locals.com, there's actually another company called Circle, which you may know is it's a creators platform, right? Like circle.so, I believe. And there's also newsletters, like Substack and Ghost. Yeah. And so people are starting to pull their communities off of these platforms that, the free model was actually wonderful 15 years ago because, wow, you can freely communicate with everybody. But now free is table stakes and we want the better than free model. Yeah. We're actually getting remunerated for all this work, right? And I think that's an obvious thing. And it's not just also remunerated. Some people think that major social networks have too much moderation. Others think there's too little. Or too much censorship or too little, whatever. But actually what really people are saying is, I don't feel that my community is properly like flipping the dials. Like I think this place is too big and, I'm not in control enough. And a smaller community that's run by a de facto or not de facto, but an actual influencer has a very clear set of rules associated with it. I think you're going to see way more of those. The big social networks will still exist, but it'll be sort of war zones that people transit through en route to these more monetizable communities. Yeah. Am I kidding? I'm not even kidding, really, right? They're digital war zones, basically.
So there's like these, what I sort of think of as like the horizontal platforms, kind of universe that could move into these entirely, digital forms. But then I kind of come back to like your basic corporation, right? So, it's a corporation, people invest in it, people work for it, they make something, maybe they make it in software, maybe they make a physical thing, they sell it, it can be sent around the world or what have you. Just, the kind of, globalization is created this way where people can like create products, sell them anywhere, all this kind of stuff. How do we envision beyond a digital or far short of a digital nation state, I should say, just making it possible? I think this gets back to what Balaji you were talking about earlier, just like that people figure out that they can form something and form capital in it and have governance and have that be done entirely on chain and create things, and that individuals can kind of contract to that, a la the sharing economy. Like you can contract to that and know you're getting that appropriate remuneration in stablecoins and tokens or what have you.
Yeah. One thing is, an interesting view on what a company is it's a contract execution engine. Yep. If you've ever sold a company, there's a diligence process where you have to assemble a folder with every contract the company has ever signed. And if you haven't done that periodically during the life of the company, there's some contract somebody signed and it's floating around in email and so on. And it's actually kind of an antiquated process. It's kind of amazing to think that people could ever do this in the paper age where you have to make copies. Like there's literally just a file folder with every contract the company's ever signed. It's actually insane to think that we were able to operate before the internet at all.
They still keep copies of all of that in paper in Japan.
Yeah, exactly. It's kind of crazy to think that there would be an archive with all the important pieces of paper on the company, and those would be the only copies of it. And it's also kind of crazy, I think, in 10 or 20 years, people think, whoa, they just had like a warren of PDFs, like on DocuSign, and that's crazy.
Right. The natural next thing is, right, that this is obviously all of these ought to be, contracts and code, right? That you can
exactly.
you
That's
can
right. It should be
like run a piece of code to audit it, sort of like people scan open source libraries and say, is this toxic toxic code because it's got GPL in it or whatever.
That's right. And just for example, sign and wire, right? That's the same thing on the blockchain.
Yeah.
Like
right.
You're basically presenting your digital signature and initiating the payment. And if you do it from your official corporate account, like, circle.eth, for example, if you use ENS, right, then it's like an official stamp.
Yeah.
I publicly committed to something. The blockchain has witnessed it. There's just so much cool stuff that comes out. And of course, you can eventually zero knowledge encrypt it or what have you, but that's like the right way to go. And then you get, what's interesting is it becomes easier to sell companies, because
Sure. Yeah.
one way of thinking about it, when you sell a car, right, to somebody, what do? You just hand over the keys, and it's taken for granted they can
RMV and titles and
okay, sure. No, you're right. That's true, right? But basically, a car is a machine that you can just sell to somebody and they pay whatever $1,000 for it, and they could just turn the key and it works, right? The original operator usually doesn't have to be there. A company isn't like that yet. A company is not a machine that you can just sell.
Well, what we saw with Sushi Swap was pretty interesting, right? It was like here's this thing, and who's got the keys and who's got the multi-sig keys, and like we're actually appointing other people with the multi-sig keys, and now this machine has just been passed over to another set of operators. I mean, that's like I think the closest thing we have in recent times to something like that. Yeah.
That's right. And so I think that you're going to see more of these things where with smart contracts, a crucial aspect, I mean, you can automate setting up and tearing down software, right? You can automate APIs, integration testing. What was hard to automate was the flow of money. You couldn't deploy easily on that. And now you can. And a program can actually hold money. And so what you can do is actually build a digital machine. For example, a good example would be something like Zamzar.com. Right, that's just file conversion, and that's just doing MP3 to M4A, and it's got like 50 file conversion things. Mm-hmm. That's something where with smart contracts you could turn that into a digital machine. That's literally just a cash generating engine.
The Definity kind of vision a little bit is like they're I don't know what they call them, but basically like it's much more fulsome. Like you could actually have like a media conversion on chain, and
that's right.
Treasury of that machine just be the canisters, as they call them, right? But
that's right. And the other thing you get out of that is you get on-chain accounting. Yeah. So now you can basically look at 5 years of quote audited financials, so long as they use the, let's say somebody else's auditing package or what have you. Yeah. You've got a consistent format and it's cryptographically signed and it's very hard to falsify. And so you know exactly what their growth rate is. CoinMarketCap is so interesting because crypto is such this odd space where you can see public numbers on the traction of almost everything, right? That's not the case for drones. That's not the case for other industries that don't have all their numbers on chain. We take that for granted in our space, but it's actually quite atypical, right? And I think that aspect, I thought it was crazy actually many years ago when there's a company called Buffer that was trying to, that did this. I mean, it's a good company, right? But it's being like super transparent. I was like, that's kind of weird, that you're doing that as like a small company, because there's a lot of, small company, as
right.
Like startups are hard, right? Like
classically, like VCs are like, it's good to be private. You don't have to, all your dirty laundry is not out there,
That's right. But what they have done, which is interesting, is they turned it into essentially a content marketing gimmick for themselves and an accountability mechanism. And the upside of just taking the hit, so to speak, on transparency was they took the hit like once, and then they were sort of inured to it, right? Like, yeah, we failed this quarter, or yeah, we succeeded this quarter. Now, what I don't like about it is if they really succeeded, then it reduces their leverage. For example, like this is not the biggest thing. I'm not saying that every company needs to do this, but Google for a very, very long time did not disclose what percentage it was taking out of AdSense to its publishers. It's just like, hey, you put this widget there, you're getting free money. We're not going to tell you if you're taking 50% or 70% or 30% or whatever it is. And eventually they disclosed it under a lot of pressure. But you can't keep any numbers like that proprietary in such an environment. And maybe that's good overall, but it is a constraint. It's something new, Anyway, Ian, I want you to get a word.
Yeah, no, Ian, I would love to hear you talk about this too. Just like the immediacy of like how do we create these today, and
No, I mean, just piggybacking off of what Balaji's saying, I think when media starts to get encoded on chain, all those things happen. And what we've learned from, crypto recently around like DeFi, for example, is that it enables higher order composability, right? And when you were asking about like, is this going to be a moment where, like the internet, there are things that get created like Instagram, TikTok, which we not necessarily could have like predicted, 10 years ago. I think that's going to be the case. And I think that that's going to be enabled by a range of things, including composability. So like DeFi, right? You have exchange protocols like Uniswap and SushiSwap and other things. You've got, interest earning, protocols like Yearn Finance and whatnot. You've got lending protocols like Aave and Compound, and they're all composable. And that composability enables things on top of it, whether they're centralized products or more decentralized protocols. You take that same thing and you port that over to something like media, for example, which I think is really, really interesting because it has enormous kind of opportunities and potential related to social networks, social media, art. There's a lot of things going on right there right now in NFTs.
Yeah.
And the idea of composable media that creates composable media experiences, whether it's like new kinds of social networks, new social media experiences, is there kind of like a composable YouTube or a YouTube experience that based on composable media? And then what happens when that composable media, you can take some of that and then put that into Aave and get a loan on it? Like, we're going to start to see some really, really weird stuff. Like, let me.
So what do you mean by composable media, Ian? Did you define that? Sorry.
Yeah, like let me give you an example. So like, let's say there's an artist. I actually was an artist by training in undergrad, and then I realized that I wouldn't be able to make it. I probably wouldn't be alive right now. But
you made the idea. That's pretty good. But go ahead. Yeah.
Well, so in this world, it's really interesting. Like if you're a really, really talented artist, let's say you tokenize your art and you start to sell that via an NFT on like OpenSea or Rarible or something like that, right? Let's say you go a step further, right? That media, which is an art piece, is an NFT that is composable. And let's say you can also encode into that certain on-chain revenues that go into a DAO, for example, and that DAO ends up being owned by your followers. Now, that NFT also has like financial value. So let's say you have, someone buys an NFT from you, or let's say you have some of these art pieces still in your collection. Maybe you can lend that out into Aave or something and get via Aave or Maker or something like that, like $100,000 loan to then in DAI or USDC or something to then build, credit to then reinvest in yourself and the growth of your business. This kind of stuff is not possible really in Web 2, right? But because of the fact that media gets put on chain, that these financial kind of things can be encoded within that, and because of the composability of media combined with this rich ecosystem of DeFi that is also permissionless, these new possibilities emerge. And so I think, like, for example, these potential hybrids between social media networks or social influencer networks and fintech now start, or like even gaming and fintech start to become possible. Another good example in gaming, right? If you're like a 15-year-old kid, let's say you're in the Philippines, some of this is happening right now around like Axie Infinity or this thing called Yield Guild. You're a 15-year-old kid in the Philippines, you don't have a bank account, you love playing blockchain-based games, you earn some NFTs through playing those games, you put those NFTs into a wallet, that wallet and those assets end up being worth like $10,000. Then you start to ask yourself the question, like, what is the difference between an NFT game wallet and a bank account? And that sort of insight starts to lead to really interesting possibilities that we haven't seen before.
Mm-hmm. Those seem, yeah. I mean, a lot of what you're describing does feel like, I mean, even those things are kind of imminent in the next year, right?
Yeah, I mean, in some cases they're already happening, which is really exciting. Because the truth is that these problems and these needs for people, they've existed for decades. And so that's what I like to see is when there's a latent or existing human need combined with the new capability of crypto that we can now offer.
Yeah. One last question for both you guys, and obviously we could just go on some of this. Is sort of, I think as we get into some of this, like these on-chain entities, whether they're collaborative, economic, independent of a nation state, kind of exist on chain. Like rubber meets the road. Like people live places where they're, you have like there's militaries and borders and guns and taxes and like, is your view like these things exist and kind of meld with that just by virtue of how property is classified, how securities are classified, how all that happens, or what is that intersection with let's just call it like national or local jurisprudence and these forms? Is it a matter of like we just need some case law to start getting established on some of this? Like where do we go on that? I'll start with you, Balaji.
Well, I mean, one huge difference here is that when you disrupt Microsoft, Microsoft can't shoot you. So that is a big difference. But I actually think that there's a whole envelope of possible outcomes. One thing that has been kind of interesting is that there is a large group of people within Western countries and within the US that are activists and advocates for this technology. And we saw that with FinCEN, right? We see that on Twitter. In fact, I would go so far as to say that, I think with BTC versus MMT, the battle will really be joined because there are people who are very big advocates for MMT, but there aren't that many people who are advocates against cryptocurrencies. Mm-hmm. What I mean by that is there isn't grassroots opposition to cryptocurrencies. Right. There's grassroots support, right? And that support importantly comes not just from companies, but it comes from many individuals. It comes from overseas. It comes from pretty much every country in the world at this point. And it comes from activists. It comes from nonprofits like EFF. It comes from academics like MIT. And it comes from financiers now, legacy financial institutions like Fidelity, right? So we're really starting to build a fairly big coalition.
Into a lot of the fabric of society and the economy.
That's right. And I think we're going to win 55-45 or 60-40 or something like that. I don't think it's going to be easy. And I'm not saying it's going to be without reversals, but it just makes too much sense to digitize this stuff. And it's fundamentally a technological advance, Mm-hmm. And so ultimately, there's lots of different models, and I can give some historical ones. One of them is the encryption wars of the the 90s, right? And that was quite a big tug of war, and there were a lot of things thrown around, but ultimately you did get SSL, right? Yeah. And what happened was the US government completely U-turned, and they went from saying, oh, encryption's a munition, you can't use it, to, have you seen https.cio.gov? Now the US government requires every US government website to use strong encryption because they want to protect, right?
The same thing's going to happen with crypto and zero knowledge proofs and all this, right? It's just going to be like, duh, this is like so much better. We should all be using this, right?
And we've actually already seen a flip of that where even a few years ago, you probably experienced this yourself, but when the Big Four audit a crypto company, they use the blockchain as a gold standard of truth.
Nodes and they operate the nodes and they're like, holy shit.
Yeah, exactly. And think about that. In 2013, people are saying Bitcoin is a scam. Less than 5 years later, they're saying it is the gold standard of truth for accounting. It's triple entry bookkeeping where we can check your internal numbers against an external standard of truth and reconcile that way. That is amazing. And it's just underreported in terms of how important that is, And so I think that the ineluctable logic of it, this is something which is technically superior. And I do believe that at least in some countries, it will win the day. Now, I also think it's possible, like New York State has actually, driven a lot of companies to launch in New York last, just simply because the bit license is actually fairly onerous, and so it's possible that there's places, jurisdictions that take, a more aggressive view.
Yeah.
But I think the world's a big place, and a lot of places are going to see that wealth is created by cryptocurrencies, are going to want that to come there. Ian, your thoughts?
I'll just make a short comment, which is, I think, piggybacking off of what you were saying earlier about how the world is now living on the internet as a result of COVID and stuff. We are going to start to see new behavioral patterns that we haven't seen before. Namely, this rise in pseudonymity and like, I think Balaji, you wrote something or tweeted something about the pseudonymous economy, right? I think we're going to start to see more of that, where people actually have multiple identities, like a named identity and a pseudonymous one. Like you can be both Clark Kent and Superman, or Bruce Wayne and Batman at the same time, in the digital world. And I think we're going to see stuff like that, where in certain cases to address maybe some of those issues where you might live in a state or in a country that isn't as supportive of cryptocurrencies. Maybe that starts to go to your pseudonymous identity as opposed to your real world.
Right. Awesome, man. This is great conversations, guys. We've gone over my my typical time because I think this is just so much fun to talk about all of this. So I want to thank both you guys for joining today, and we'll look forward to doing this again. There was a correction that also happened during our.
I think it might have been I think it might have been right after I joined. So maybe that.
All right, Ian.
Maybe that's the thing.
No. Oh, it dropped $3,000. Well,
It was rising when you guys were on, and then when I showed up, it crashed. So
it's fine. The long-term trend is up, so that's fine.
Lesson learned.
All right.
Thanks, guys.
Thank you, everybody.
See you later. Thanks.
All right. Until next time, stay well, stay safe, and stay informed.